The first silver squeeze that we saw was not really much of a squeeze. You had a bunch of traders and young people who were trying to do what they did to AMC and GameStop, and that's not going to happen. I think that where you see a silver squeeze in all of this is the fact that you have 5 banks that have on COMEX alone are short between 7 and 800 million ounces of silver. And when I said metric tons, I'm sorry, I meant millions of ounces, 800 million ounces that India had purchased, not metric tons. I was thinking gold. And you're talking a whole year's worth of global mine supply by these 5 banks. I think that people will wake up and say, where the hell do I put my money? And bang, if a tiny, tiny fraction of all the money, if there was a 5, even a 2.5% allocation to gold across the whole financial matrix, you're talking a 5-fold increase in demand at 2.5%. Most financial advisors will say, fine, 5 or 10%. 10%, you're talking a 20-fold increase in demand. In 24 hours, everything's gone. And when you realize that all this stuff comes from across the globe in an environment where people are freaking out, at what point do these mints around the world say, maybe we should not send it all to the United States. Maybe we should take care of our own people here or hold it back. I think that's a possibility too, nationalization of some sort. So yeah, I've said forever, and again, it's one of these things I say it and people think I'm full of shit because I'm talking my book, trying to, inject fear into the equation so they hurry up and buy, but it's just simple math and logic. Yes, I do think that will happen, and as God is my witness, I do. I've been saying it for years, and because I've seen most of my career, we get to this time of the year, right around now, where the mints run out of product, and they will not make any current year issue until the next year, 2025 in this case. And they say there's no bull market, Danny, like a metals bull market, because people look around and say, I'm not going back into dollars. I'm not, even if I have a healthy profit. Look, silver's up 40% on the year. Gold's up 35% on the year. Gold is, what was $1,200 an ounce 10 years ago. It's now 27 and change. You've way over doubled your money. If I call any of those people who bought from me 10 years ago and say, you want to capture that double? No, I'm not going back into dollars, they'd say. So it's different than most other bull markets. In fact, the higher the price goes or the scarier the world gets, or both, only reinforces people's motivation for owning it to begin with. So that's one of these deals where, unlike normal markets with metals, the higher the price goes, the higher the demand goes. Usually when price goes higher, we see demand start to fall as a reflection. They say the cure for high prices are high prices, and the cure for low prices are low prices. But this is different. This is an environment where people say, as the price goes up, I was right, the world's falling apart, better buy more. It will be the defining characteristic of this market, where people just can't get it because so few people own it right now, and there's so much money out there. That the people that you and I talk to are the pimple on the elephant's back. The elephant has no idea. If the elephant turns around and says, my God, I need some gold now and some silver, it'll be gone in a matter of hours or a day or two from the major retailers, who then have to order more, most of it from across the globe. The first silver squeeze that we saw was not really much of a squeeze. You had a bunch of traders and young people who were trying to do what they did to AMC and GameStop, and that's not going to happen. I think that where you see a silver squeeze in all of this is the fact that you have 5 banks that have on COMEX alone are short between 7 and 800 million ounces of silver. And when I said metric tons, I'm sorry, I meant millions of ounces, 800 million ounces that India had purchased, not metric tons. I was thinking gold. And you're talking a whole year's worth of global mine supply by these 5 banks. On the LBMA, it's between 4 and 6 billion with a B ounces. Short. So yeah, this is a situation that I don't think ends well for one of these banks, where the squeeze happens, I think, when one of the banks breaks ranks. One of the banks says, listen, we can't keep letting our balance sheet bleed in this direction. So we're going to cover and get out. And if one of them breaks ranks, it's kind of every man for himself. That's when you see the price start to rise dramatically. But, with 800 million ounces short just on COMEX, the $1.50 move we saw a week ago, you're talking what? $1.2, $1.3 billion loss in the span of a week. And that's why they're kind of trapped, these bullion banks who have created this short position, where on the LBMA, they're trading upwards ends of 2.9 billion ounces per day. That's 3.5 times annual global mine supply, where forever less than 0.25% of these contracts stood for delivery. Not the case anymore. So when 95% of these trades are paper trades, not backed by anything, it's naked. It's just because these bullion banks have the ability to play with the price. They have unlimited checkbooks. Well, that works against traders and hedge funds. It doesn't work so well against China, Russia, and India, who have the money to play whatever game they want with margin calls or dropping the price or rising premiums, lease rates, whatever it is, margin requirements, it doesn't matter. And they'll stand for delivery. And that's exactly what they're doing. So that's how you get a silver squeeze. It's not the silver squeeze where when you realize that the average allocation in this country is so paltry, less than, 0.5% to 1% total of metals allocation across the board in the United States. Sure, it will add fuel to the fire, but the real possibility of silver squeeze are these other countries exploiting the delivery mechanism on COMEX and the LBMA. They know what we're doing. They've made repetitive statements about it in other commodities as well, like in grain, where one of the BRICS members says, we produce and consume more than the West does, but we have no ability to control the price. That's whether they're talking grain in this case, or they understand what it is with all of the world's commodities that are valued in dollars. So could there be a short squeeze? Yeah, absolutely. I don't think it will be at the hand of the trading public here in North America, but it will be more along the lines of a failure to deliver in London or on COMEX, where you see a cash settlement on COMEX, where in essence they have rules in place that protect the exchange, which is kind of another way of saying cash settlement or force majeure is a default. That's when things start to greatly accelerate. But these other countries have been using the suppression of the Western paper market against us. So they don't care that we've been suppressing the price. In fact, they're all for it. That's why they're not bitching about it, because it enables them to acquire things on the cheap. That will change in that environment, and it could, but
the first silver squeeze attempt in 2021 by retail investors was minor, compared to what could happen if larger financial forces were involved. 5 major banks currently hold massive short positions on COMEX, amounting to nearly a year's global silver supply. If these banks facing mounting risks were to start covering their shorts, it could trigger a cascading squeeze, dramatically spiking silver prices. Unlike typical bull markets, rising metal prices attract more demand, driven by investor fears of economic instability. Additionally, foreign governments have taken advantage of suppressed prices, steadily draining Western vaults by standing for delivery. This scenario could lead to severe supply strain and potentially force countries to prioritize domestic needs, exacerbating market tension. If one bank exits the short race, others may scramble to do the same, creating a rapid surge in prices and exposing the fragility of the leveraged paper markets.